Hi folks, Nick here recapping the week ending 7/10. On the face of it, if you look at the scoreboard, nothing goes on. Green candles, quiet week. Far from it. You know it. It's far from it. Let me show you in case you missed it. Here's the SPY. Chop, 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 chop. We tested lows. We tested highs. This is the, let's see here, 7, 2, 3, 4, 5. Okay, so Monday morning we opened down to a no vote. We rallied hard, which was weird. Then we gave it up, and then we rallied hard, which was weird. Then we gave it up, and then some. We rallied hard. It's weird. We gave it up again. So choppy. Good news is we had several tests of the low on some awful, awful news. So what's that all about? It's all about a few things, mainly Greece, so we're looking at the cause, and also China. We had obviously Greece, the no vote, and then a deal, no deal, and then China, we had some collapses in their in their stock market, and it took extreme measures. They took extreme measures at first, it didn't work. They took extreme measures next, and then salvaged it. By basically closing more than half the market and making it almost illegal, actually making it illegal to sell. I don't know the details, but I know that it is. So it took extreme measures to stabilize it. All right. So the scoreboard is for the week. It's a positive one, meaning we had a green candle. However, we set lower lows and lower highs. The good thing is that we did establish a bounce at the levels where, on the floorboard that we've had. So basically prior bounce levels held. Okay, that's pretty important. What's also important is how long will those levels hold? So if basically we're going through what could happen now. So Monday, what could happen over the weekend is we'll decide whether those floorboards will hold or not. That's what I'm trying to say. If China keeps holding into Monday, looks like it will, and bigger if the Greek Parliament passes the votes okay to the Prime Minister's latest proposal that he presented to the Eurozone, then we also have to get the okay from Merkel and company. So we have three ifs. One, China, Monday morning, and one which is the Greek Parliament actually okaying the proposal that the Prime Minister submitted yesterday, and also Merkel and company accepting those. Now, the hitch in the Greek Parliament is the fact that this is the same proposal. What happened is the Prime Minister finally broke down and said, okay, I lost. So I'm going to submit a proposal that's exactly what they gave us on 6/26, and to which we said no. The Greeks said no to the same exact proposal. In fact, the Prime Minister not only said no with Varoufakis, he said, we're going to put it to vote to the Greeks, and we're going to tell them to vote no. And here I am trying to tell them, forget that whole week of hell that you guys went through. Just kidding. I want you to vote yes this time. So he put them through heck in order to come back and say, all right, I'll take the deal. And the end result is now they're in a bigger hole. And that's why I say maybe Merkel will say yes, maybe she won't, because now they're in a bigger hole. So the givens, the set of assumptions that they use, are no longer valid. Maybe. I don't know. But at least if the Parliament votes yes and Merkel says no because of that, then they should be able to say, okay, but since they caved, we can work with it somehow. So I'm optimistic for a quiet open, meaning no disaster, so we should run. If nothing happens over the weekend, it'll be like a relief pop of sorts that something bad didn't happen. But I'm not so optimistic that we will get a final deal from Greece. Oh, that would be fantastic. And then the floorboard will definitely hold. This will definitely hold. And then we'll go back and challenge the all-time highs. That's a reason to run, because it's a relief pop. I will short it. You know, let them run, and I will short it. But I may give them a couple of days if it's indeed a final deal. Because nothing has changed in the thesis. Yellen was the third one this week because we had a Fed event, the minutes that came out. And then today, Friday, the 10th, Yellen had her speech. And those speeches I absolutely love. She speaks most openly, and she says most important things that most people miss. It's like our edge. We did it last time, just after the 18th of March, when everybody rallied 100 points based on her saying, I'm not raising rates in April. She had one of those speeches, and she gave me clues that drove my trades and were fantastic clues. So today she said the same thing. I still expect to raise rates this year. So forget what about Greece, blah, blah, blah. Nothing has changed. That's what she said today, but nobody's saying it that way. It's as simple. She still expects that it's appropriate to raise rates this year. So she's going to do it. She's going to do it, okay? Unless we fall off a cliff, which could come next week. Because if we get a no vote in Greece, oh, and by the way, China also is still a big if, right? But to add to it, I think they have GDP next week. And if the numbers, or other economic reports too, if the numbers come out way off, then that's another cause for a move. It could go both ways. If they come out, hey, we're growing 8%, but we're expecting 7, that's a run-up. If we come in under 5 or in the 5s, I think markets will get scared. All right, so this is what could happen. Oh, we also have earnings, so be careful. So if I'm long Intel and AMD is reporting or vice versa, I need to know that, because if AMD gets hammered 10%, Intel's going to get hammered. I remember when the whole industry there fell. I'm using this as an example, 10% or 5% or something, some ridiculous number. Okay, and that's one thing. So earnings, pay attention, do your homework. Also, Apple, I want to see what the heck was that. My speculation, I told you already, is that this is not selling because of fundamentals. Yes, the watch may be not selling as well, but the watch wasn't in a lot of models. Even if it was, it's a small, teeny bit of Apple. It could not have caused a drop of 3% in 2 minutes or whatever it was. That's number one. And number two is, okay, China's slowing down, but it's not a revelation that happened in 1 minute. And the fact that China, first of all, disappearing from under Apple, everybody figured it out at this point in time, I find that hard to believe. So this was an event where somebody needed money fast, and they just sold. And by somebody, I mean somebody big. So it's not weird. Also, it came on a day where we had issues with the stock market, quotes for the NYSE. So there are no coincidences in life, in my opinion. So there was an event that is not fundamentally driven by Apple's earnings or ability to earn that caused it to fall down to here. And therefore, it was an opportunity to go long, as I told you, etc. Enough said about that. But it's going to report earnings, and it will provide, after the earnings, it will provide us with an opportunity to enter a trade, hopefully long or short, whichever. If it does get hammered, and I don't wish it that they hammer it because a lot of you are long Apple, I almost wish, I will go long it big time. I can, during earnings, it's better to stay out of full trades. I don't like to take full money into the trades, into the earnings, because the reaction, I've said that to you many times, is unpredictable. It's a complete coin flip. What does that mean? It means that even if Tim Cook calls me up and says, hey, Nick, here's a peek at our P&L for tomorrow. Here's our balance sheet. This is what we're going to say. I can't tell you how the markets will react because I don't know what they're expecting. I think I know, but I don't know. Nobody can guess which way the markets are going to receive it, good or bad. And even when they do it, we don't know if they're going to flip around. Remember the Netflix that ran up $100 or whatever and then turned around and closed red big time the same day a while back? So it could happen. Disney, same thing. Sharp rise and then a complete drop and then eventually recovered. But the immediate short-term reaction is unpredictable. But that doesn't change my opinion of Apple. Mid to long term, it should be okay. It's going to take a lot to break this beast. Tim Cook will have to pull so many bonehead moves back to back in order to break the momentum of this massive company that prints money. Okay, so having said that, the earnings reaction, the immediate move, is complete coin flip. That's why I don't take full positions into earnings. That's why it's better to play the indices during the earnings season rather than individual stocks. Google, I believe, reports before Apple, so Google may afford another play, but I don't play it. This is Google. See, not nice. You know, iron condors would have paid for a long time. This is 1 year, but not anymore because we have earnings. This was last time's earnings, big reaction. This was another time's earning, big reaction. Here's another one, big reaction. Here's another one. So you can't guess, you know, up, down into the earnings, then up. This I can't even tell. Down, then up, then down. So it's almost a complete coin flip, right? This is visually telling you that you cannot guess which way the markets are going to react. All right, so having said that, the small caps give me a little bit of courage today. They close stronger than the broader indices. They into the close, and then they gave it up just after the close. But on in general, they for some reason just felt better than the indices. But now, again, it's binary for next week. The events, what's going to happen in Greece, what's going to happen in China, open are going to determine the open on Monday, I should say. All right, so this is what could happen and what we should do. What should we do? Slower traders should avoid the weekly trades. They are too risky with such violence. Look at this chop. Very few traders could have survived that. Okay, they were challenging. So slower traders should stick to the long distance trades that I share with you, like the RUT December or January even, and all of these. So I can add to my winners. I can close some of the winners. I can hedge some of the open, balance my portfolio. For example, if I was short via credit call spreads, and there's still 40 or 50 cents left in the trade, let me show you what I'm talking about exactly. The RUT long distance trade at 1400, you know, I shorted a long time. We talked about it to death. If I'm shorted and I don't want to close it, still has 30, 40 cents, whatever it's left. Maybe it's time to set a on the fall to set the credit put spread side of it about 20%, 25% lower, and double my potential profit, my potential yield. So that's what I mean by balancing my book. And this will afford me a hedge. So now I have a hedge. Now I have an iron condor. That's the kind of thing. So if I have an August trade this way, I would get a credit put spread or add to it a little bit and add a credit put spread. Just play around with my own portfolio. Stick to what's working rather than open new risk. That's what I'm trying to say. That's a viable strategy. Now, nimble traders who can book losses and can book profits can try to scalp a lot of iron condors next week because of the premiums. And I shared with you many this afternoon. So review those. If you have any questions, let me know. Don't assume that I'm doing all of them, and don't assume that I'm doing none of them, but they're all trades I would take today. That's why I'm sharing them, and I'm sharing the level of certainty with which they can or cannot work out. The level of certainty usually is 90%. However, given that the fact that we have so many headlines, it is up in the air. So sure, on paper it's 80 to 90%, but if you get a 2% day move, you can throw that out the window because they only have a 3% buffer thereabouts. All right, so far the ranges are played out perfectly. I will put out a video just about the ranges to give ourselves a report card. But I said we've known that the ranges are what, around 2100 and then a little bit around 2075. From last Friday, I remember saying there are several magnets, 2100, 2075, and 2050. All came into play, and they landed right in the middle of them, right? And I said we have resistance above and support below, and it all held true. And I'm not making this up. I'm not a genius. I'm just reading the tea leaves, all right? So the SPY and the Qs, the SPY was tested several times, obviously, like everything else. So let's go to it, and I'll show you in pictures. So it was tested several times and hard on the no vote, since the no vote, and it rejected the low several times. Emphatically, the last rejection was very emphatic. Let me zoom in on it. The candle, this candle right here, is look at the low way down here and says, no way, I'm going to close at the high and higher. So a good open got a lot better, and then it was tested a little bit. So that is an emphatically bullish candle. It would need a headline to reverse it, a negative headline to reverse it. Now the Qs also were set up differently, though. The better thing about the Qs is that they're off the low, and they tested the low like almost on a straight line, so it's more definitive, which makes it dangerous because it also coincides with the bottom end of a nice zone that I need it to hold, right? So that's the Qs, and the IWM, I believe, will give us, where is it? Right here. An idea. Volume, by the way, was average. The IWM, what's good about it is it's 3 higher highs, higher low candles in a row after a major rejection of a low test. See that little candle right there? Long candle, I should say. This is kind of saying, forget it. You know, this is a low that I rejected twice, and I'm going to set higher lows and higher highs. So that, again, will need a headline to fall apart. And it looks like a breakout from a lower high trend. I can draw a line over the high, 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 and suddenly 2 candles at a breakout. So it could get to this orange pretty quickly, even by Monday, if headlines are cooperative. All right, so these are it. We've talked about the opportunities in Apple and in Google to play maybe the earnings. Hey, if I can't trade Apple or Google fully because of the earnings, then why not take a small flyer, as they say, a lottery ticket, a small cost that could yield good money. And with companies like Apple and Google, they're so good, they print money, that I don't mind going out in time and risking a few bucks on a debit call spread, for example. I've shared that information with you. This way, small expense keeps me engaged with the earnings season, and if I lose it, I don't cry over it. I don't do 100 of them because a whole bunch of small ones end up being one big one. But I do a handful, and I usually share them with you. Doesn't matter where or what I buy, I just want to participate to the upside somewhere. I don't have anything on Google yet. I'll share it with you next week if I do it. All right, if you have any questions, please don't hesitate to ask. I do answer all questions promptly. Again, stay safe and leave room for error.